Good evening. This is Doc Severson for the TheoTrade report for Tuesday, January 23rd. It's not very often when I look at the 10-year note rate, but effectively what this is if you see 26.24 over here, that means that the 10-year note rate is about 2.6%. And so what that means is that interest rates are on the move right now. Interest rates are on the move, and they have been on the move really since the fall time frame. So this is a fairly large move that we're starting to see, and this is really starting to move. So even though we're getting down into an exhaustion area, so we might see some consolidation in this area, notice that on a larger time frame, we've also hit a higher high here. And from a pure charting perspective, this long monthly downtrend that we've seen in play really since the year 2000. So all of this, you can thank quantitative easing for all of this, right? Rates going down, and then all of a sudden what we're starting to see now is that we've broken the chain. We're starting to see the price make higher highs and higher lows. So we've broken that trend line, higher highs and higher lows. This could be worth watching also because of the reason that the Fed is always and more than likely is right now behind the curve already. So here's the CME group. This is the probability of Fed rate hike. And right now what they're saying is that there's a 98.5% chance that it's going to stand still where it is right now. Not back down and not go up, only a 1.5% chance that the rate is going to be hiked the next week's meeting. Okay, but as we go out to 21 March, this is where we start to see a little bit of change in probability. There is a 72% chance that the rate's going to be hiked in March. So right now they're giving zero chance of a rate hike that's going on. But what we're seeing is the interest rates are already moving in anticipation of what's going on in the economy. Now, if we look over the Treasury bond futures, we're starting to see a major move here. So this could have some impact on the equity markets. You can see that this parabolic move that went just straight up here into the last couple of years has now come down, broken that trend line, and is in the process of putting in a monthly lower high. This is actually a fairly powerful pattern. So if this actually does undercut this level, and Bill Gross has already gone on record saying that he believes that bonds are in a bear market, even though I see him only down 14% by my math. But if this does undercut that lower, to make a lower low, then that's going to be a very significant signal. And where would that money go? Well, maybe back into equities again, believe it or not. I mean, don't look at this market and have any confirmation bias that you know that it's about to crumble, even though I think a lot of us sense that, boy, this is getting a little hot and this is definitely into euphoria mode. But don't forget, when an asset is in euphoria mode, and all we need to do is to go back and look at silver of a few years ago, we can see that most of the gains came at the very end of the move. In fact, the biggest candle was that monthly candle right at the very end of the move in silver. And notice that the largest monthly candle here so far is the one at the very end. Isn't this the definition of euphoria? So fear of missing out and many, many other reasons, and it could be also due to just the rotation that's coming out of bonds right now as rates start to go higher. Now, Apple may bear watching in the near future because Apple just got hit by, I believe it was JP Morgan today, on a downgrade because it looks like their iPhone 10 is not selling as well, and the suppliers have already backed down in terms of the orders. I don't see Apple down all that much. I mean, $3 so far is all that we've seen Apple react to the downside. So it's still staying strong and consolidating near the highs. Perhaps that news had already been priced into Apple. Now, everybody knows that there's kind of a dearth of premium to sell out there, except for a few assets, and one of them has been the gold miners. So in this case, Nugget is one of the long gold miner, and the opposite of Nugget is actually Dust. So Dust is the exact opposite of this chart. So what we're doing is we're actually playing these not as pairs, but we're playing them against each other. So in this case right now, we're looking to to take puts against, we're selling puts against Nugget right now. So what we're looking to do is, now that Nugget has gone into a primary uptrend again by taking out these highs, so it's in a primary uptrend, we're looking to take pullbacks against there and then selling at levels where we'd be a willing buyer if the price comes down to a sinus. So again, in a primary uptrend, taking this pullback, selling against this level where we'd be a willing buyer, and we're doing this week in, week out. Now, keep in mind that this is a really, really aggressive strategy because you do not want to be a long-term holder of this particular asset. Let me show you why. So if we go out to a normal monthly, weekly, daily chart, if we go out to Nugget and we look at this on a monthly or weekly chart, we can see that this thing is just completely getting squashed to zero. This is a leveraged ETF, and this is the drag that occurs with these things. So we don't want to hold these things for very long. This is only a very short-term trade that we're selling premium against. But you can see for the chain on Nugget, we have actually, there's a lot of implied volatility with these options. So the whole game here is to get in, get your fair share, and get out of this. We prefer not to be assigned, if at all possible, on these trades. You can also play these as spreads if you want to. However, keep in mind that the two pairs don't exactly work exactly the same. Notice that we have penny-wide options on Nugget, and if we go over to the bearish component over here, we have nickel-wide options on this one. So this is nowhere near as good, not quite as liquid. So we generally spend most of our time going after and prosecuting the options on Nugget. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.